The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the February 9th magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows that each of us should always be pioneers of our future versus prisoners of our past. Hope each of you had a fantastic weekend. Let's make sure that you and I do all that we can do to have an extraordinary week. Of course, we'll do that by kicking things off on our Monday by always recognizing that life happens for us, not to us. When we make that shift, that little 2x4 shift out there, well, that means that you and I can then find the gift in every set of circumstance that the universe is going to throw at us. And that's the role of the universe. Of course, that's the role of the market as well. We're going to go take a look at its circumstances, and we'll do that by taking a look at the futures markets, the commodities markets, the currency markets, anything else that you would like. Of course, I'm absolutely grateful for your presence here this morning. You can reach out to me. We can look at things together. We can look at a specific trade that you're in or something that you are anticipating. The easiest way to do that is to pick up that phone, dial on in at 877-927-6648 internationally, 727-445-1044. This is Magnificent Monday. Thank goodness it's Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow futures off 93 points, trade out at 17,688. S&P down 0.5%, off about 10.5 points, trading at 2,042 and change. NASDAQ off 20 points, trading at 42.07. The King is on a slight move this morning, up 2 pennies, trading out at 94.87. You got Goldilocks up $3, trading at 12.38. Silver's up 22 pennies at 16.91. Light sweet crude up just over $1, trading out at 52.71. A quick peek across the globe out here. Let's start off, see what's going on in Europe this morning here. We've got the DAX. She's off 191 points, down 1 7/10% out there. Maybe a little bit more of that Greek contagion thing affecting the DAX out there. In fact, let's just take a quick peek at it, see what kind of damage it's doing on a price chart basis. You know, you got a little gap down here this morning. No island top, although close, but no cigar out here. You did have a shooting star candle. That was at the high here on February 3rd. What we do know about the DAX, what we should know about the DAX is why is that tool not on? That's interesting. That's really interesting. What the Sam heck happened there? Man, oh Shevitz. Let me see here. Let me do this. Man, I don't know what happened to that style template. That's pretty wild. Okay, so now we're back. We should be back in the saddle. Okay, so we know the DAX went ahead, made a 1 A to B equals CD to the upside. Gave it a little reversal signal here on that trading session of February 3rd. Pull back so far. If we take a look at just simply the last leg, not really that much in the way of damage here, not just yet. Not even making it to the 0.382 retracement, which would take it down to 10.310, 98.93 on a continued pullback out here. So far, you know, damage pretty well contained, even though it's down nearly 2% here this morning. The FTSE over in UK, it's off 62 points, down about a little less than 1% out here. We know about the FTSE, of course, by doing that here. I just lost any work that I had inside the FTSE. That's just simply dealing with resistance up at these highs here. FTSE is really going to be one of the vehicles we'll use to determine whether or not the market is going to break out, because it's got some very strong resistance, horizontal trading ranges out here in the 68, 70-ish range. Right now, you're down at 67.89. It too really pulling back. I wish I had volume for you. I don't. But so far, nothing really too bad. Kind of like our markets out here. Let's take a look at what's going on over in Asia last night. The Nikkei up 63 points, about 0.3% out here. Come on, populate. There we go. And the FTSE really consolidating up towards its highs out here. The high was put in on December the 8th. Most recent high, I should say, that was at 18,030. So the the Nikkei looks pretty good. If we look at the, where are we at here? The Shanghai up 20 points last night. It had 2020 vision up $20.20, up 0.6% out there. Really no big deal. Of course, in the case of the Shanghai, and this is a daily chart out here, it is trading below its most recent swing point from January 19th. That says coming back into that October 30th level. Well, October 30th, shoot, that would be way back here. Now, I don't think we want to see the Shanghai do that. Maybe coming back and testing the lows here from December 24th down around 3,074 may, in fact, be its next move. Let's go finish this off. Take a look at the Hang Seng. Down 158 points last night, 0.6%. Nonetheless, not much in the way of a damage out here as we take a look at its stock chart. Okay, so got the ES Mini off, about 10, 11 points out here right now. Let's go start off and take a look at it. Let's start by taking a look at the daily chart out here. So if we look at the daily chart for the ES Mini, what we're going to find is that it's trading out below a level of resistance. Now, this resistance out here, I think we covered this on Friday. But if not, just go back to the January 9th swing point high out there, 2,062. That's your line of demarcation. If the ES Mini can get above 2,062, that would be very bullish. I would say you're going to go move up and test the high from December 29th, and then any close above 2,088.75. That brings into play a consolidation pattern. The lows around 1960 to 2060, so you got about 100-plus point move out there in the ES Mini. If it can crack that level, what do we know so far? Wasn't able to crack it on Friday. It tested it, it rejected it. What we've seen here the last two times, that price has moved all the way back down to the, in essence, the lows back here from January 6th or so in 1984-ish, even a little bit less than that. So there is a possibility that the high that was put on Friday is the high, and we're just going to see this consolidation pattern continue to play out here. That's inside the ES Mini. That's on the daily time frame out here. I was able to listen on John Logan's show, and there was some conversation about the ES Mini, different time frames out here. So this is a daily time frame. And I posted a few things in the den out here. And one of the callers was asking about different tools or support and resistance. Of course, it always depends on the time frame it is that you're trading. So very clearly, with regard to the daily time frame out here, that 2,062 level is really important. Likewise, at the bottom, you'd have to say it's really the lows here from December 16th. Those will be real important too, 1961. But we know that's a 100-point spread, so it's a big spread inside the ES Mini. If we take a look at what's going on an intraday basis, here's several time frames. Here's a 10-minute, a 30-minute, 120, 300-minute. But let me switch over here because I posted a few things in the den. I'll show you how I did that. Now, many of you are not inside our Tigers Den. You ought to give that a shot out there. You can come over to the homepage at TFNN.com. You can test drive that for the next 30 days. And what I was looking at was this chart here. So I started off with just a 10-minute chart. And on the 10-minute chart, well, yeah, let me step back let me do this. Let me step back for one moment. Uno momento. Here's the S&P 500 on a weekly chart. And the horizontal lines that you see going across my screen, these are horizontal lines of support and resistance. These are areas, kind of like if you were to get a digital triptych, these are areas that have been tested. These horizontal lines have been tested more often than not. And now, when I say more often than not on a weekly chart, if you're going to really take a look at it, you've got to come all the way back down here. The green lines happen to be weekly levels of support and resistance. And in this case here, we're identifying these horizontal trading ranges. And what I've done is, not I, but the guys over at Traders Formula Consulting, what they've been able to do out here is they've been able to go ahead and automate this wonderful tool for me. Now, the largest area, points of contact, either closes or opens. We're only using the body of the candle. That took place inside the ES Mini inside the S&P 500 in between the 1122 to 1265 level on a weekly chart. 33 touch points and 19 touch points. Once we had that area, we then were able to go ahead and add that price difference to each other level to help us identify the floors that the S&P 500 in essence makes out here. What do we know about the weekly weekly chart, we know that the weekly chart has been testing this 1986 level ever since it was broken through back in the end of October, the beginning of November out here. And this level is held as significant support. Why is that important? It's important because if you see any kind of significant close below 1986, that'll say trouble in River City. Of course, that trouble in River City is this white diagonal line going across my screen. That happens to be the S&P 500 going back into the 2011 timeframe, where the S&P made its last significant bottom out here. Significant bottom from the standpoint of using it just simply from a trend line basis. Now, fast forward to that 10-minute chart, just so you can take a look at how you can use one set of tools, which really should apply to any time frame and any chart out there. You just, once you can see the patterns in them, then you can go ahead and can use those on a consistent basis. Now, I'm going to switch over and take a look at the ES Mini. So the futures contract, which is trading, 23 and a half hours or so each day. If we take a look at the ES Mini, what you're going to see, gold. There's gold in them there charts of Steve Rhodes out here in them there hills. And we take a look at the gold lines. These happen to be the intraday time periods out there. The blue line that shows up on the screen here happens to be a daily trading range. But I'm going to go ahead and get rid of that just simply so I don't confuse anybody here. So let me switch over to that tool. Let me go ahead and turn that off. There we go. Boom, she's off. Okay, you see one, well, it was supposed to be off. Oh, that was the midpoint. I grabbed the wrong. There we go. Now that'll be off. Okay. You do see one blue line going across my screen, 2055 out there. That is a very important line of demarcation. But what we're looking at now is we're looking at the past 1,600 bars out here. So I'm using 1,600 bars in order to use these calculations. We could use more. I found 1,600 seems to work pretty good inside of the ES Mini contract out here. Now, what I am doing as well is when I'm looking back to each of those 1,600 bars, I'm only using the opens or closes of the candle. What I'm also doing is I'm getting rid of a lot of the noise. Everything when the ES Mini contract closes out, to do its bookkeeping at 5:15 Eastern Standard Time. That's when I actually go ahead and I close this out. Most times there's not a ton of trading. Now it starts to pick up maybe around, maybe around 2 o'clock. Well, it could actually start picking up around 9 as Asia starts coming on board. So it can be some activity, but usually not too much. Usually it's the international markets catching up to whatever went on inside the U.S. So I'm just looking at real U.S. activity, if you will. So I'm looking at between about 6 a.m., between 6 a.m. and 5:15 in the evening, and I'm ignoring all those other points of contact out here. What we can see is that the level where the ES Mini, S&P futures are trading at right now, which are trading at the 2041.75, 2042, 2040.50. Over the last 1,600 bars, getting rid of the noise out there has been touched. When I say touched, I mean closed at. So we've seen a close within a small little fraction inside the it says 2040.63 if you're looking at it on my screen, but the ES Mini doesn't trade there. Only trades in increments of a quarter. So it's at 2040.50. That has had 61 touch points. We can see that the ES Mini has been trading out here really ever since last night. After we saw a little bit of a gap down at the open last night. Then it took some time off for some getting into the Grammy music type stuff out here. So any close below this 204050 point, that's going to really bring into play probably 2028, 2034. Otherwise, this could be the bottom. And it could be the bottom because on a 30-minute chart, using our 7th inning stretch pattern, we did get a 7th inning stretch, not in the ES, but in the NQ and the Dow futures. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, 2 days from now, this coming Wednesday at 5:30. I'm going to be doing a workshop. It's a workshop that all newsletter subscribers are able to access. Now, here's the cool thing. It's never been easier to become a newsletter subscriber of Mastering Probability. It's never been easier to get into a workshop where you're going to be able to take away actionable things. I'm going to teach you stuff that nobody has ever taught you. The name of the workshop is based on the VIX index, volatility trading, everything you need to know about trading the S&P 500. Look, when it comes to, if you're looking for technical tools, if you're a technician out there, or you just want to understand, maybe you want to answer the question, hey, the market just closed down big time, and you're starting to lick your chops. Maybe even somebody that says, okay, I was thinking about going short the market and it was cruising down. I didn't, but I'm going to go ahead and jump on board as we come into the close out there, only to see the very next day the market go ahead and bounce. If you'd like to understand why that occurs, I'm going to teach you how to do that. You don't even have to be much of a technician. You just have to follow a few basic rules out there, and I'm going to show you the reasons why. So, there's the cost of education, in this case here at TFNN, well, it's not really much of a cost. It's effort. It's some action on your part. And that effort on your part is coming on over to the homepage at TFNN.com. You'll see in the kind of the middle left-hand corner, free webinar, Steve Rhodes. You click on that. It takes you to a sign-up. You're going to go ahead and you're going to give credit card information. That's it. Most of you already have that out there, but you're not going to be charged anything. And you can cancel the newsletter service at any point in time. But if you are a person that looks for education, if you're not growing your what? Exactly. So I want you to come on over to the homepage at TFNN.com. I want you to sign up for this workshop. I want you to go ahead and suck out all of the information that you can. There's other great workshops that are coming up as well. So you really ought to take advantage of all of that because it won't be there forever. And these are actionable items that you're going to be able to use that work, that you'll be able to use for your trading, your investing, doesn't matter what. And it'll help answer the questions. It'll help go ahead and fill in those puzzle pieces for you. So I'd love to see you. This is this Wednesday, 5:30. Look, doesn't matter if you can't be there because it will be archived on your members page for the following 30 days. All right. So we took a look at the ES Mini. We looked at the daily time frame. We looked at a intraday time frame just to utilize some tools such as these horizontal trading ranges. Let's go check out and see what else is going on in the market. Let's start off by taking a look at currency pairs. So your friend and mine is the Euro Japanese Yen. Why is it our friend out here? Because the one currency pair that tracks the stock market, it's a leading indicator. It's the one currency pair that tracks the stock market, the direction of the stock market better than anything else. And when there are divergences that occur, meaning that the euro yen is going this way, meaning to the north, and the market is going this way to the south, it is the currency pair that ends up winning the battle. Does it win the battle immediately? No, you've got to use other patterns inside of the stock market, inside of the tools that you use for trading, in order to take advantage of this tool. I mentioned that the markets, we took a look at those levels of support inside the ES Mini. If we take a look at what's going on even on an intraday base, so in the case of the euro, let me just go ahead, euro yen, really doing nothing, just continuing to move sideways, much like our markets, consolidating sideways. Oh, geez, how about that? Is that there's nothing there, so there's no clue here. If we do look for clues on the short-term basis, and there's nothing more bearish than a bullish pattern that fails out here. We don't have that. What we do have is coming off of the high out here, which happened to be a seventh inning stretch candle. That was at 11 o'clock in the morning. That was on Friday. I believe that was on Friday, wasn't it? Come on, don't do that to me. I'm on live air out here. Yeah, that was on February 6th, on Friday. You got one of those seventh inning stretch candles to the upside out there, and the market has moved down. And guess what we got coming into this candle right here that was coming on as we came into the 9 a.m. hour. We got that seventh inning stretch candle to the downside out here. Now, we've got 2 minutes to go before we have a confirmation on that. That says that the low inside of the NQ out here at 42.0150, that's at a very important low out there. If we see a break below that, this whole thing starts to recycle and says that, hey, something that should have been bullish, just like something that should have been bearish, even with the market moving higher out here. Forget about some of these other letters that are out there because it was a little different numbering out here. But in any event, this move lower, this is an important point of support. No bullish reversal signal, close to being a hammer, looked like a hammer, turned out to not be a hammer candle as we came into the 9 a.m. So that low out here that we're looking at, that low, by the way, is 42.0150. If I didn't give that to you, that's an important level to be watching. Got the exact same pattern on the 30-minute chart here for the Dow. So the Dow and the NQ are signaling to us, hey, the move to the downside may be over. Only time will tell. And we're going to find out. We're probably going to find out between 9:30 and 10 a.m. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow off 76 points, trading out at 17,747. S&P down 5 at 2,050. Composite off 14 points at 47.29. Russell 2000 off 3 at 12.01. Goldilocks up $4. Silver up 26 pennies. Late sweet crude up $1.27 as we speak. Leading the charge to the upside, it's Motorola Solutions up 6%, up $4 and change. Novartis up $4. That's 4.5%. Qualcomm up 3%, up $2. Hasbro up $2. Cons Inc. up up about, what is that, $1.75. Crane Company up $2.78. To the downside, Tableau Software Data, that's off $4. PVH Corp, that's down $5. Hey, here's a joke for you, a small joke, not one that's going to get much in the way of big laughs out there. But what does a baby computer call its daddy computer? No, it's not Tableau Software. It's Data. It's Data. And Data happens to be the ticker symbol for Tableau Software. But most of you knew that anyways. Hey, Tesla Motors, that's trading off $4 and change. Anheuser-Busch, this bud's not for you this morning, off $2.40. Amazon down $2 as well. Diamond Offshore off $2.50. Again, our call number 877-927-6648. Let's go take a look at a couple of these things that are moving. What's got Motorola Solutions moving to the upside so big out here? Surging on reports of something, possible sale. Okay, that's what it is. So let's not spend too much time taking a look. Yeah, let's go look at Motorola Solutions. Let's go see what the rumor is doing out here with regard to Motorola out here. Remember Motorola? How many of you had one of those brick phones out there? You know, Motorola, they were it, right? They were the one and only. All those big, well, before that you had the phones that you could actually fit inside of a case, little carrying case out there. Those were more than bricks. Those were like little suitcase luggages. But they also worked as cell phones. And then we had those big gray bricks out there. They certainly did not fit in our pockets. In any event, you got Motorola Solutions. It gapped up this morning. Volume behind the move out here. Let's see what the heck's going on with this. I guess okay. Gapped up this morning, been selling off ever since that little rumor came out. It's got to 1.2 million shares, so pretty decent volume inside of it. Let's take a look at some things here that are moving, like Novartis. NVS is a ticker symbol, up 3.8% out here. I don't see anything moving it other than maybe some other news item. But if we take a look at Novartis, what it's trying to do out here, it's trying to take out its swing point from January 20th. It's got 2.8 million shares there. It's on 711,000 shares today. The top of that is 102.59. You take that out. Let me see here. You might already have a confirmed A to B equals CD. To the upside, I'm sure you do, because 445 versus, yeah, you most certainly do inside of Novartis. So Novartis is just simply trying to complete an A to B equals CD pattern out here. That's going to take it into the 1-to-1, takes you to 103.78. But I would say more likely 107.26 would become its target. If we look at Crane Company, CR is the ticker symbol. Crane is trading out at 264.82. 463,000 shares. This is trying to get over it's getting over a resistance level that's been in place. A little consolidation pattern inside of Crane that began in October of 2014, right around the $63 area. So the consolidation is between 63 and 53. It's a 10-point consolidation that says that if it can stay above this, we'll call it the price level of 63.25. You're at 64.97. This ought to move up to about 74 bucks. Let's go see what's hanging out at 74 bucks inside of ticker symbol CR. At 74 bucks, it's going to take you all the way back towards this little bar right here from July of 2014. I don't see any reasons for this to maybe not be able to get back there. That is ticker symbol CR, Cranes. Also moving to the upside, you got IPGP out here. It's got the heebie-jeebies. It is trading out at 85.38. That's up 4% this morning. I don't see any numbers. Well, it looks like they had some preliminary numbers out here. We won't pay attention to those because they're not showing up on my screen. This did have an A to B equals CD. Boy, this thing had some nice movement on it on Friday. Big, wide-ranging bar out here. Volume behind that move was 900,000 shares. It's done another 147,000 so far. This is moving up to the 87.90 level. Ticker symbol there, IPG. Let's take a look at what's moving to the downside out here. What's rocking the world to the downside? Off $6 this morning. It's Shire PLC. SHPG is the ticker symbol. I don't see any news behind this. It is a gap down this morning. Of course, Shire PLC, this has had a big problem back here on October 15th. 30 million shares to the downside. It's trading with inside the gap. The top of the gap is at the price point of 242.96. You know, when it trades in inside this level. You're never really sure where it is headed to. Shire PLC, I can tell you it's got a high volume low. And at some point in time, if it falls out of bed again, this ought to move down to about 156.25. Right now, trading in the 200 range. If we look at also things moving to the downside, you've got PVH Corp moving into the number one slot out here. PVH is trading off $5.89. That's down 2%. Let's go see where this thing is headed to. It's got some volume, 450,000 shares. This thing had gapped up with good volume. This was on the trading session of September the 4th, 4 million shares to the upside. And then this thing gapped down with about 3 million shares back on January 6th. In any event, this thing is below its breakout areas. And let's go try to figure out where this might be headed to. Looks like we're going to need to look at a weekly chart in order to gauge where this may head to. The weekly chart out here inside of PVH, well, here is the breakout. Here is that breakout, and it's going to head down and at least, or should, try to, if it hasn't yet, it's going to go test probably the areas of about 99.05, 96.73 out here. It has broken through its level of support, which was at 105.01. Ticker symbol there, PBH. So 96.73, 99.05 becomes its target area. If we go take a look at, so it looks like those those trough Gs are doing their thing inside of the 30-minute chart on both the Dow and the NASDAQ out here. And as well as that horizontal line, even on the 10-minute chart out there, that 2040 area. So what that sets up here is it sets up a likely move to about the 2053 area to 2055. That's the number you want to watch, 2055. And if we see the ES mini move above that, the message would be to not be short the market out here. So we'll see how that plays out. We may get to see that during the hour and 20 minutes that I'm still here with you. If not, well, then our man Basil will take a look at it. Also moving to the downsides, we looked at PVH, we looked at Shire PLC, we looked at Tableau. Let's go take a look at Tesla, TSLA, down about $3 as we speak right now. If we take a look at Tesla, it is just trading. This is a weekly chart, by the way. This is just trading in a trading range, a descending trading range out here. Let's go switch over to the daily chart. The daily chart shows that same trading range out here. This thing has made it basically up towards the top, little shooting star candle as it came into resistance. That was on February the 5th out there. Moving higher with 3.5 million shares on that trading session. That was going into 3.3 million shares. Wasn't able to get above that level. Now it's pulling back this morning, 446,000 shares. What we know about Tesla is that in order for it to change its trend, it's got to bust out above that descending trend line, that channel line that takes us all the way back into the trading session from September 3rd, 2014, when Tesla had made a high of 288. Right now, you're trading out at about the 214 level. Let's take a look at, what do we want to take a look at now? Goldilocks. Let's go take a look at Goldilocks. What is gold doing? Well, we know about gold is we got our answer with regard to that initiation move. You got to love that. That initiation move coupled with what the commitment of traders data was communicating was suggesting that gold was going to move to the downside. Well, that it did. The arrow, if you're watching us on our screen out here, again, just a tiny morsel. This is just similar, and you'll be able to use this for the rest of your life. You will be able to use full moons, and you'll be able to say, hey, honey, it's a full moon tonight. I'm going to go take a look at the gold chart and see what gold is doing out here, because there's a really good chance. There's like a 90% chance that there's going to be some kind of initiation move inside of gold, to the upside or to the downside. Well, we saw that move with conviction to the downside. That took place, actually began on the full moon and went ahead and took place and furthered that on Friday. What do we have here right now? At this stage of the game, from retracement low to retracement high, that means this is the daily chart we're looking at, from the low on the trading session of November 7th all the way to the high that was put in here on January 22nd. Price is now below the 0.382 retracement level with the wide-ranging bar. Now, gold is going to save itself here, and that saving itself, you can see it's also in a descending price channel out here. What's the beauty about that? Hey, the beauty about that is just like when we took a look at Tesla, is any close above the descending price channel, that's going to signal to us that the next breakout in gold would be taking place. It'll do itself justice by starting to make some smaller bars out here. And it would also do itself some justice by getting above that 0.382 retracement level. Because if it doesn't, gold remains in a current downtrend out here, and that brings into play the 1198 area. It's 0.618 retracement of its entire move from the bottom to the most recent high out here. We will just have to wait and see. If we look at silver, I don't need to go back over to the silver. We haven't looked at silver. Silver's up 31 pennies as we speak right now. The case of silver, let's pull this back. This is the current contract in silver. We saw price break below the January 29th swing point. That price out there was $16.74. Luckily, price is back above that area. If it closes back below 16.74, it will likely go fulfill its 1-to-1. It's uno to uno, A to B equals CD to the downside. Take into the $15.81 to maybe $16 level. And that's what's going on in the case of silver. We go take a look at light sweet crude up $1.09 as we speak, trading out at 52.76. What the heck did I do there? I can't believe, God, I delete the chart more often than not when I do this. That's okay. Hey, we can get back. But what I hate about that is the fact that I lose all of that gosh darn data. Oh, well, that's, that's the baby computer out there. It was meant to be. Let me go put this over here. We'll go take a look at light sweet crude. Now we got to go ahead and just start from scratch. Not that that's a big deal out there. But let me see here. Let me get a style template that's got a couple of things that I like to use out there. Okay, so now let's go take a look at light sweet crude. Hey, how about that? The A to B equals CD pattern popped up back on our screen. You got light sweet crude. What we know about light sweet crude, it made a low so far. It's made a low. January 29th, that price point was $43.58. Makes a bounce, nice little bounce out there to the 58.02 level. Then makes a 0.618 retracement. That was accomplished back here on February 4th and February 5th, and then it has taken off. Now, I won't exactly say taken off. It's trading back inside that swing point from February 3rd. The next point of oil, light sweet crude test 54.24. Getting above that says 58.02. 60.92 would be in its cards out there. I think that 58 level is going to be the level of significant resistance inside of light sweet crude. We'll see if we can, in fact, even get up to that area. Right now, we've got the so we covered gold, we covered silver, we covered light sweet crude. What have we not covered out here? What have we not covered? We got some currency. We didn't cover the euro itself just on its own, so we ought to at least go do that. So let's go take a look at the euro on its own. The euro here has been trying to bounce. It's trying to put in a bottom out here, but price is now testing that swing point low, which happens to be January 26th. The high of that low is 1.1295. You're trading right now at 1.13. If the euro closes back inside 1.1295, pretty good chance what she's going to do is go test the low, $1 at 1.109. And then if it tests that and it does it with any kind of conviction, meeting a wide-ranging bar, then you got the euro moving back. In fact, what we do is let's put this on a longer-term time frame out here. Well, will that show up on the weekly? Let's try the monthly chart. Give me a moment. Let's put the monthly chart. That looks pretty ominous, does it not? We still know about the monthly chart. Its price is well below its level of its old level of support. Now that is resistance. And if we take this back even further, what we still know about the euro out here, there's really two things. Longer-term pattern inside the euro says that if it fails at this level where it's trading right now, which is $1.12, we'll call it, it's trading at $1.13. That says 99 pennies would be in its cards out here. In the longer term, that may be the case for the euro. We'll know so when we take a look at whether or not it comes back and it tests that low on its daily chart or whether it busts through that level. What else? Let's go take a look at the Great British Pound out here. That's straight out at $1.50. So that is off of its lows out here. This happens to be still, this is the monthly chart out here. Let me switch this over real quickly and take a look at a weekly time frame. Let's see what kind of support The Great British Pound has. We know it made a 1 on the weekly basis, a 1 to 1.272. A to B equals CD to the downside out here. But on the weekly chart, I'm not seeing anything that should suggest that this has turned its corner. We take a look at both the 8 and 13-day exponential moving averages. Those things have held as PS, daily resistance. Of course, they don't want to hear that in Great Britain. We got the Dow off 48, S&P down 3, Composite down 8. This is Steve Rhodes with TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow still in the red out here, off 32 points. S&P just barely down a point. Composite is off about 3. The Russell 2000 is up about 60 right now. Over in Europe, the DAX off 178. The FTSE is off about 39 points as we speak. As I take a look at the sectors inside the S&P 500, you've got the XLK is flat. The energy sector, the XLE, is up 50 cents. Let's go check in on the energy sector out here, see what it is doing. As we take a look at it, this is the weekly chart. Let's switch over and take a look at the daily chart. Of course, the weekly chart shows that nice hammer candle formed on the week of January 12th out there. That says that low should be a pretty significant low, 71.70. As we take a look at the daily time frame here for the energy sector, the XLK, we know that it's got some fairly significant resistance. This is the line of demarcation that needs to break through, which is $82. If it can break through $82, then it'll try to go ahead and repair and close that window and get up to the $85 range out here. Well, what is it going to do? I don't know. It's going to run into resistance at about $82, right around that level. It's trading at $80.30 as we speak right now. Now, we haven't checked in on the VIX index, the summation index, any of those. So let's go do that here before we close out the hour. Let's take, how about that? The VIX index as we speak right now, that's trading out at 1879. That is well above the 50-day exponential moving average, which is at 1764. 1764 is the number you're going to keep an eye on today. You close above that, that says that the retracement should continue inside of the market out here, the retracement off of Friday. And I expect it to just be a retracement if, in fact, that's what takes place out here. But right now, the VIX is above the 50-day exponential moving average. That's never a good sign out here. If we take a look at the summation indices, let's see if everything is still mean and green. It is. Everything is above the zero line. If you look at the New York Stock Exchange, she's been strong. This has been the actual strongest index in the market out here. Its advanced decline line making all-time highs. That's right, making all-time highs without price. That says that the troops are doing the work out here, and eventually price will follow. Bull markets do not end when the New York Stock Exchange is at all-time highs on its advanced decline line out here. Right now, if we take a look at the daily chart for the summation index, it's in bullish mode out here, even though we've had quite a choppy market. Same holds true for the NASDAQ composite. NASDAQ composite, really no real damage in it. Of course, it has a significant line of resistance at about the 48.15-ish level, but it too is in full bullish mode out here, even with some small type of retracement that we've seen inside of the market. The Dow doing the same thing out here. The Dow is broken above its descending price channel out here. It did that with conviction, a nice wide-ranging bar on February the 5th. It is in bullish mode. Its price oscillator is also above the zero line. So a little bit of some conflicting signals out here with regard to the VIX index, where it is priced at, versus what the summation indices are showing you for the Dow, for the New York Stock Exchange, and for the NASDAQ composite. Again, what do we expect here? We expect any kind of move higher to be met with some significant resistance at the 2053 to 2055 level inside of the ES Mini. What do bulls want to see? They want to see that level breached. They want to see it close above 2055 with a nice wide-ranging bar. A little volume wouldn't hurt as well. What do the bears want to see? They want to see the bulls get trampled when price gets up to that level. Which way will it play out? I don't know, but we may find out here during the day. So stay tuned, because hour 2 of the Trader's Edge is up next. If you're off to start your Monday, have a great day. Thanks for beginning your morning here with us at TFNN. Have a great day and look forward to seeing you soon. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.